Good morning, everyone. Welcome to the PivotBoss pre-market video for Thursday, May 4th, 2023. I am Frank Ochoa, aka PivotBoss. Real quickly, thank you very much for joining me yesterday afternoon for the PivotBoss monthly market outlook for May 2023. If you missed the session, you can find the recording down below. Also, there's a link to a free educational webinar next Tuesday, May 9th at noon. You can get more information about that in the description below as well. We'll be doing a webinar called Making Money with Trade Sequences, which are trading blueprints here that I will teach in an upcoming Swing Trade Pro 2.0 session coming up later on. You can learn more about that at pivotboss.com/profits. All right, let's take a look here at the ES in the daily time frame right now. Post FOMC, we had the FOMC statement, rate decision, and press conference yesterday, and a quarter point raise here in the rates. And what you see here is initially a little bit of a pop, followed by a decline into the close. So the initial move so far away from the newly minted FOMC key levels is down. 4150 is that level right now, and we're seeing the initial move down away from that level. What tends to happen here is you see the initial move, whether it's down first or up first, can tend to be away from the level. You find rejection, and then you snap back to the level down the way. So we could be looking at an initial move down out of this range, but we got to continue to watch that 4070 level. 4070 very important here. The idea is that we likely come test the previous week's low, previous month's low, and if a rejection develops here, we could snap back up within the range. A failure here, and you open up a transition downward toward the bottom of the range and perhaps back toward the previous year's close, 38.68. A ton of energy built up here in this range right here over the last 4 to 5, 6 weeks. And once we start to see expansion from that range, we could see a significant move in the direction of the expansion. Right now, pushing downward away from that FOMC key level. The expectation is for further weakness toward the edge, and we'll see what happens at that edge. If we take a look here at the NQ, very similar price action. This one here pushing down away from the FOMC key level yesterday. This FOMC is 13,223.25. Price again pushing down away from it, not significantly, but down away from it. You can see a pattern here of rejection at the previous month's high, previous month's close. Right here, previous month's close, right there, and back down. This is the previous month's midpoint here. To fail here, you open up the previous month's low, very similar to the ES, to go test last week's low there. We're still inside this large trading range, and soon, once we get out of this range here, we'll have quite a move that could be ahead. Again, given the FOMC here, if the first move is down, we could be down until we see rejection, and then we may snap back to this later down the road. So right now, watching the previous month's midpoint here, a failure, and you open up the previous month's low up ahead. If you take a look here at crude oil, what a move in crude oil over the last couple of days. This thing flushed all the way out to new lows for the year. These are also below last year's lows as well. That's the previous year's low. That's the current year's low. And late in the session, we saw quite a bit of selling pressure here. 2 days back to back, 5% lower here, nearly 5% lower this day. And then in after hours trading, we saw price drop very hard in the opening minutes and then reverse back up. Price taking out the 64s. That's a tremendous reaction. That's already played out since yesterday's after hours reopen. Look at that tremendous rejection tail that we have developed. Here's your FOMC key level. We're back at it, 67.71. And we could be at a spot here where we begin to see a pattern of strength back up within the range. This is the type of rejection you want at an extreme. And if you take a look right here, we were looking for a continuation to the downside. And we got all the targets we were looking for initially. We got the 72s initially, we got the 70 target, and then we went and flushed the previous low, and now we're seeing a reaction of this magnitude. So what that would say right now is that if this can hang on to these gains by the end of the day and maintain this wick reversal, we could be looking at a bounce back up within the range back towards 76 to 77, the middle of the range, and year-to-date VWAP. And we may actually rotate back to the top of the range as this thing continues to trade within this expanding range here. So today's very important for a strong pivot low in crude oil. If it can hang on to that low, bulls would be looking to defend the midpoint or into 66s for a 10-point bounce back up. All right, let's take a look here at gold futures. Gold up nearly 0.5% right now. Went out there, tested the high. We got ourselves a new high for the year, and also took out last year's high as well. 2078.80 is last year's high. We just took it out yesterday, and the day before we were talking about the 2030 level and how this narrow range was not unwinding to the downside. Instead, we could see another squeeze back up toward highs. Here we are right here with a great squeeze. We have seen now a very strong higher high rejection, and that was the point we were making before. This initial higher high rejection was decent, but we couldn't get lower, so we might need to come up here and retest again and see another potential higher high develop. We are seeing that now. Perhaps it's marking a stronger edge than before. Again, these are 4-year highs. These are all-time highs. If you go all the way back here, you'll see how far back you got to go to see the recent highs. Right here, this is the highs from a couple years back. We didn't quite get there. This is last year's high, and we're right inside that zone right now. So again, this is the upper edge of this 4 or 5 year range. If you start to see rejection like we're seeing right now, we could snap back within the meat of this range up ahead. So this could be a higher high failure, perhaps a bearish divergence. If the rejection remains into the end of the day, kind of like crude oil, we could be snapping back to the other side of the range up ahead at the very least. And lastly, taking a look here at the YM. The YM here with an FOMC key level that has been minted at the 33.811s. It's almost right on top of a prior FOMC key level. You can see again the initial move has been down. The initial move has taken out the previous week's low and the previous month's low. And we're still kind of in this expanding range. Are we about to snap back up within the range, or do we finally transition through the bottom of the range and drop to the next support level down? This blue dotted line, 33.315, is the previous year's closing price. That's the key level right now. Again, we were holding above it back here. We transitioned here and dropped down and traded below it. Transition back above, trading above it. Do we get another transition back through it? This is a transition day to take us back up, transition day to take us back down. We'll see what we get at this edge. Again, a failure here, and you open up a return back toward 31.832. So keeping an eye on this edge as we move forward here into the rest of the session. All right, that is it for now. We'll see how this plays out heading into the rest of the day. Again, if you missed the PivotBoss Monthly Market Outlook, you can find the link in the description below. Also, the Making Money with Trade Sequences webinars coming up Tuesday, May 9th at 12 noon Central. You can read more about that at pivotboss.com/profits. All right, thanks for watching, and I'll see you in the trading room. Take care.